I just have to read a script. And we're live now. Hi, everyone. I'm Mariah from GoWP. Welcome to today's GoWP webinar, Tax Season Q&A. Everything you need to know as an agency owner with Jeff Meziere and Jeremy Doorn. Really quick, before we start, I just want to say a couple of words about GoWP in case there's anyone out there who isn't really familiar with us. At GoWP, we create happiness for digital agencies and help them to become more profitable. So whether you're looking to grow your team with a developer, copywriter, designer, or project manager, or maybe you're interested in outsourcing services so you can focus on your growth, we've got you covered. We've also built a digital agency owners community, and that's an active community of more than 1,900 agency owners where we hold regular group calls, webinars, and mastermind sessions. You can join us and grow your agency today with GoWP. Also follow us and join us on Facebook at Digital Agency Owners Group. So today, if you have any questions about partnering with GoWP and how we can help your agency, please feel free to reach out. Now, a few notes regarding today's webinar. I will be watching the chat. So if you have any questions, just throw them in there and we'll get them to Jeff and Jeremy. So let's do a quick test of the chat. If you're watching us right now in the Facebook group or here on Crowdcast, go ahead and introduce yourself and let us know where you're joining us from. Such polite guests here. Hi, everybody. Houston, Woodstock, Georgia. Kim is joining from New Jersey. Anna from my old stomping ground, LA. Jeff, Oxford. And Tucson, Arizona. Chatham, Virginia. Great, we're representing the country really well. Perfect. And so let's get to why we're here today. To tell you a little bit about today's guests, I'll start with Jeff Meziere. He's the co-founder of Business Value Academy. Let me back up. He's the virtual CFO at Business Value Academy, where he helps agency owners grow revenue and maximize profits. He is passionate about using data to drive better decision-making. Jeremy is the relationship manager at Core Business and Financial Services. Now, that's a financial firm he's been a part of for 12 years. His mission is to help small business owners on the financial side of their business to help align their personal and business goals. Now, through the process of planning, educating, and empowering small business owners, he helps them make and keep more of their hard-earned money. So I really want to say to you both, thank you so much for joining us today and lending your expertise. Is there anything, in addition to that very brief intro that I gave you both, is there any other details about your experience that you would like to share with today's viewers?
No, I'll just try to set the stage real quick. One is, full disclaimer here, I'm a CPA, but I'm not your CPA, right? So all these questions that we answer, all too often that situations are very unique to an individual taxpayer, right? So we've created this forum today to be able to try to answer as many questions as we can. Some of them apply to all taxpayers. Some of them, as I already see in some of the open Q&A here, are questions that we'd have to have a lot more information before we're actually able to give you, quote, advice. So we're going to try to answer those in a generic way to provide some value to people. Today's an open forum. There are no bad questions. So if something's on your mind, it would be a good time to be able to get that out off your chest and let a sophisticated person like Jeremy, who is knee deep in the trenches right now in the middle of tax season, give us a best answer. So as a virtual CFO, I always like to look ahead, right? We use data to drive decisions looking forward. That's the reason I love Core Group and the things that they do in this local CPA firm here with Jeremy. He's going to know more of the details around tax filings. I'm more of the trusted advisor that helps grow businesses. The reason that we're aligned is that Core Group and the things that I do are very similar. They are not a traditional CPA firm in the sense that right now is not the time to be talking about 2021 taxes. That is post-mortem. There is not a lot that we can do today to affect what our taxes are for 2021. What we do is we help people look forward to effectuate what it is their tax return looks like in 2022. There shouldn't be any surprises. So if you're wondering what your tax liability is for 2021, there's an opportunity for you to build a relationship with a trusted advisor, with somebody like Jeremy. Anything else you want to add to that, Jeremy?
No, I think you put it exactly right. Doing taxes right now is just basically posting the scoreboard for what happened in 2021. There's really not a whole lot to do for 2021 at this point. So I think you're exactly right.
Excellent. Thank you, gentlemen. And as a reminder, we do have some prepared questions, and anyone watching today, please feel free to drop any questions that come up in the chat. So to get started, gentlemen, the first question that we have that was submitted is, when do I need to provide a 1099 to customers who inquire?
Yeah, this question actually came up in the group, and I might have answered it wrong in our Facebook group. So, Jeremy, I'm gonna let you take the lead on this, and I'm gonna clarify the question because it was posed within the Facebook group a while back. There's been some changes around if I make payments via credit card, then am I required to file a 1099? And also on the flip side is, if people are paying me, am I required to give them a W-9 if they ask for it? So those were two kind of questions that maybe if you can answer those for us.
Yeah, I mean, basically, the answer for the 1099 is if you've got a customer that you're paying for services more than $600 through the year, you've got to issue them a 1099. There's some, and that's if it's personal or an LLC. If it's a corporation, we don't issue 1099s to corporations. So typically, if their name ends with Inc., you can probably not issue them a 1099. It doesn't really matter where the money comes from. The only time it would matter is now with this digital age. You've got people like the PayPal contractors sometimes, or Venmo, certain things. And what we've ran into, because we do bookkeeping like on a monthly basis for clients, and what we've ran into is sometimes they're writing checks to people, sometimes they're Venmoing them. But Venmo and PayPal now, if you have a business account, they will automatically kick out 1099s for you. So you actually don't have to do those 1099s. They will already kick those out as long as they have the information from the W-9. So then it's just a matter of, then you almost have to issue two 1099s if you're writing them checks as well to the same vendor. So it can get a little hairy, but if you've got a good bookkeeper on your side, it shouldn't be a problem. And then the W-9. Oh, go ahead.
No, go ahead. You're fine.
No, I was going to do the second part of the question, the W-9 question, right? Are you required?
Yes, correct. Yeah. Well, are you required? So I think the starting point for us here is the W-9 is a request of information that if I am an agency owner and I'm about to write a check for more than $600 to a vendor, or anticipate that I'm going to write checks that accumulate more than $600 during the tax year, I should request a W-9 from that vendor in order to identify as to whether I would need to submit a 1099 to them at the end of the year or not, right? That requirement is something that we would want to encourage all agency owners. If I'm writing checks to people and those are going to accumulate more than $600, I would want to request the W-9, correct?
Yeah, and I would go a step further and say if you're contracting with somebody, just like if you had an employee, if you were hiring an employee, you would get them a W-4 before you ever paid them anything, right? You would get them a W-4, figure out what their withholdings are. If you're going to contract with anybody, regardless of whether you're going to pay them $600 now or you plan to pay more than $600, get a W-9, because what ends up happening is you don't get a W-9 because you don't think you're going to pay over $600. You end up paying over $600. Now you have to issue them a 1099. Now you have to go and track them down to get their information, their social security number, their address. They've moved out of state. They've moved out of the country. They've moved to where you can't get a hold of them. And now you don't have an option. Like, you can't issue them a 1099 because you don't have their information. And you're just going to end up with penalties potentially if you don't issue those 1099s correctly. So I would say what? Go ahead.
It's always easiest to gather that information before you write a check to somebody because they're looking for that payment, right?
They'll fill it out for you if they want money, for sure. People are motivated sometimes that way, for sure.
And the second part of that question, as I understand it from previous group, and I think in line with this 1099 question, is what happens when people are asking me to fill out a W-9 and give them my tax ID number for my business, right? That is a requirement, again, if you think about it, on the other side, for them to pay you as your agency, you are required to provide them your tax ID and classification so that they can make a determination as to whether they need to issue you a 1099 at the end of the year or not.
That is correct. And if you refuse, or if you have a contractor that refuses, it goes both ways. But if somebody doesn't want to give you their business information for whatever reason, it's probably not somebody you want to do business with anyways, because it sounds like they're hiding something. But further than that, the IRS does say that if they're not willing to give you a W-9, then you are required to withhold 28% of that as withholding. So you can't give them the full payment anyways if they won't give you a W-9.
Right. So, and we're going to talk about some of the specifics today. Applying by the law and actual operational sometimes are different, right? At the end of the day, you are required to issue a 1099 to anybody that you pay more than $600 to. Graham, you asked a clarifying question here that is specific to on my W-9. When I ask for a W-9 from a vendor and they provide that to me, what is the indicator that says as to whether I need to issue a 1099 or not? That W-9 is asking them for their legal name, their tax ID number, and their entity classification. All of those classifications on there, all of them are required to have a 1099 with the exception of, Jeremy?
A corporation.
Corporation, right?
Yep.
So if you are, any other designation is required, you are required to issue a 1099 for payments in excess of $600 to anybody after they fill out that W-9 for you.
And I mean, we can go further. I don't know how into the weeds we want to get on 1099s. It's probably not the funnest conversation to have, but you've got people like lawyers who, if you pay a lawyer anything, you have to issue them a 1099. There's a special box for a lawyer, and there's also rent 1099s. There's different stuff. We're talking about non-employee comp right now, but there's a whole bunch of different things to issue 1099s for.
Right. And this is where I'm going to suggest to you this. We talk about this a lot in the Business Value Academy, is that one step here for all agency owners. If you don't have one, let me just make this point. Go find a trusted advisor. Have somebody that you are working with who can help you answer questions that are specific to your issue. So often I hear people who say, I don't have to do that because my friend doesn't do that and his CPA said that he doesn't have to, right? That doesn't necessarily mean that anybody's going to ever represent you in front of the IRS. That friend's CPA is not going to go represent you based upon information that he provided to your friend, right? So find a trusted advisor that will represent you, that understands your facts and circumstances, and who can help you be in the right defendable position.
And I don't think a defendable position to the IRS would be, well, my buddy's CPA told him that he didn't have to do this, so that's why I didn't do it. I don't think the IRS would accept that. So I'm just throwing that out there.
Correct. All right, we've beat up 1099s, I hope.
I think so. Uh-oh. You're
One
muted.
question, and am I?
She's muted. She was talking about. I didn't mean to interrupt.
Sorry.
She was talking. Sorry.
That was me. I muted myself. Jeff, a few moments ago, you mentioned the $600 threshold, and Kim dropped a question that I thought we could address too. Kim asks, do I automatically give a W-9 to all my clients that pay me more than $600, or just wait for them to request it?
It's a request. I would not lead out with it. Personally, operationally, I wouldn't just, hey, you signed up and you agreed to my terms and I know you're going to pay me, so here's a copy of my W-9. But I'm going to make it readily available. If I need to have an internal operating process that if somebody was to request that information, that I have a easy way to be able to readily available W-9 copy, already signed. I can send that off via PDF or whatever, and be able to respond to those W-9 requests.
We have a question that just came through Facebook, and I know we're going to talk about LLC versus. You are an LLC filing as an S corp. they don't need to give a 1099, correct?
I'm assuming that we're talking about an LLC that they
Okay.
don't have to give,
Could you,
that they don't have
can you
to,
hear me?
they don't have to, yeah, I can hear you. Can you hear me okay?
Yeah, you cut out a little bit there for a second.
Yes.
Go ahead, Jeff.
Yeah, so an LLC by designation, there's nothing that says one way or the other about a 1099, right? So any entity, any LLC that is paying in excess of $600 to us as an agency, they would still be required to send us a 1099. I don't think maybe I'm not understanding the question.
No, there's like on the W-9, there's a box on there, I think, that says you're an LLC taxed as an S corp, which then I think they're asking, does that make them a corporation and you don't need to give them a 1099? And that's not correct. If they're an LLC, they get a 1099. Whatever their tax designation is doesn't necessarily matter. I would still give them a 1099 because they're an LLC and not a corporation.
And I'm going to put a pin in this conversation around 1099s and move on to the next question, because there are a lot of differing opinions. So Jeremy is giving you his opinion about what he does and guides for his clients. We could argue this all day long, because I know a lot of people are going to lead out and say, well, if I pay with credit card, I don't have to give one, because now credit cards are required to report transactions over $600. S corps are not required 1099s. Those are things that you need to work with your CPA and make sure that you're comfortable about your position that you're taking on 1099s.
So we're pivoting away from the 1099s, but since the bottle's been open on S corps, there was a question. If you're an agency owner, is C corp, S corp, or LLC the right move? What makes the choice the best one?
Oh, well, if there was a magic button, then we wouldn't have all these options, right?
No, there is a magic button. What are you talking about? There is. No, there's not.
Yeah, there's no magic answer. If there was one that was right, then we wouldn't have all these options, right? And so, again, I'm going to lead out by saying, find a trusted advisor, one that can actually go through your individual facts and circumstances. Leading out, I'm going to set up my agency. I'm going to go get a tax ID number. I now have created myself a sole proprietorship. I move into potentially LLC land and go and get this limited liability certificate. That is its own kind of living and breathing entity, if you will, out of sole proprietor. Now I've got this LLC. How that becomes taxed and how the tax, the income flows through to my personal tax return, these are all questions that come into play, right? So there's no answer of LLC out the gate that is a single member LLC that would get reported on my individual income tax return, and or if I have partners, that LLC files a partnership, or if I then incorporate or make the election for my LLC to be taxed as an S corp, then it's its own living, breathing entity, files its own tax return, and the income is passed through to all shareholders, even if I'm the only one. Or again, I can make that election and become a full-blown C corp, and the C corp pays its own taxes, and then I pay taxes again on any dividends that I take out. All of these are options, but again, facts and circumstances of what I plan to do and how much money I leave in the business and what my tax rates are individually, liability reasons, I would tell you is the worst position to be in is a sole proprietor, whereas I'm just an individual who starts agency work and I file everything on my Schedule C on a tax return. That's the easiest way of doing business, but it's also the greatest amount of liability. So the first layer is probably that LLC layer, but again, facts and circumstances, I'm going to suggest you get with a trusted advisor, and most any CPA that I know can help guide you through that conversation.
That's great. Your pardon me. Your answers are so well-rounded. You're addressing some of the other questions that have come up, which is great. And I think you just answered this other question we have: do freelancers have to become a corporation? I know I've heard you say work with someone who can address your needs more directly, but it sounds like you just said that that's greater liability, but work with a professional who can advise this person?
Yeah, absolutely. So my kid's little lemonade stand, if it started to blow up and do something different and they start, selling a bunch of lemonade, they have the exact same options as we do as freelancers. So I'm an independent contractor. I do a little bit of design work. I do some stuff in WordPress, and I'm developing. I've got some customers out there who are paying me for my time, effort, and energy to develop these products and services. How they pay me individually comes in the form of a check. I deposit that either into my personal account or now do I start creating things for A, liability protection, B, income tax advantages. Those are all decisions that those are the two main ones that we really come into play as far as what entity classification we would decide to choose in working with our CPA and probably engaging with an attorney at some point in time to draft up documents if necessary.
Excellent, and that leads to our next question. So we've heard several times today, get a good quality CPA. One of the question is, how can I find an accountant that's both reliable and local?
I have a response, which is I always ask my friends, right? My friends first, friends and family of who's your CPA and do you like them and why, right? There's a lot of societies out there. I know that every state has a society of CPAs. There's a website where you can do some searching for a local CPA trusted advisor. Those are some of the resources that I would use, especially in a local market. I don't think that you have to have a local CPA, and there's a lot of benefits to not having a local CPA, which is I don't want people in my neck of the woods to know things that are going on with me. So having an out-of-state CPA or trusted advisor sometimes is just okay. I mean, we work with clients personally on the virtual CFO side. I work with clients all over the country, and I know Jeremy does as well, right? They don't have to reside here where I live in the neck of the woods of Oklahoma in order for me to be able to help provide guidance and assistance to them.
Yeah, I'd agree.
Jeremy,
What? Go ahead.
I was just going to ask you if you had any other resources to find an advisor or CPA.
Man, I think the people that you already trust in your life are probably some of the best resources that you can find to see who people are using, and really finding somebody like we've talked about, like you talked about before in opening, finding somebody that's proactive, right? When you own a business, all this stuff affects your taxes and everything else, getting tax surprises, growing your business, all this stuff. Find somebody that's actually doing that instead of just filing tax returns. Like that, I mean, that's probably not going to help you in your business. I mean, compliance is what it is, but I think you want to take it a further step and have somebody that's really working with you throughout the year.
Yeah, if I'm going to give you my advice is if you're just now wrapping up all of your receipts and putting them into a shoebox and getting ready to go take them to a CPA, and then you think that CPA is going to be able to do anything differently than any other CPA out there as far as filing your tax return, you're wrong. And so the opportunity is to transition your way of thinking of this is not post-mortem reporting of going and try to effectuate change on my taxes for 2021. If I haven't talked to my CPA towards the end of 2021 and started to forecast what my tax return looks like so that there's no surprises today, if I don't have a round number in my head already today in the middle of 22 about what my tax liability for 2021 is going to be, you have an opportunity to reach out to, and I'm going to encourage you to reach out and find a CPA, a trusted advisor, and change the dynamic of that relationship.
For sure. Well, and we just talked about all these tax elections that your LLC can be taxed a bunch of different ways, right? Well, there's certain deadlines to make those elections, and there's certain reasons to make those elections. And if you're not doing that proactively, you're going to be behind the eight ball. I mean, you'll get there eventually, but you might have wasted tens of thousands of dollars in tax if you don't make that S corp election on time throughout the year, right? And then you wait till the next year or whatever. So there's different tax implications to having that proactive look as well.
Hey, and Jeremy, let me go ahead and provide some value here to the folks that I know are the types of people on the call as far as our audience. And we talk about some of the freelancer and agency types. Give me that first deadline. If I am a sole proprietor only and I've done no tax planning so far, and I wanted to go and set up an LLC and make that S election, those are due by March 15th, correct?
S elections are due by March 15th. They are. That is correct. But March 15th of the prior of the year you're electing. So like if you wanted to do it for 2021, it would be March 15th of 2021.
Right. So we have so we don't have necessarily an opportunity to change anything for what has happened in 2021. But I could be right now, if I'm looking at a deadline of value to everybody on the call, I still have 30 days to be able to go and find a CPA, have that conversation. And if I want to set up an LLC and incorporate, I could do that for tax year of 2022 up until March 15th, correct?
That is correct. There are late elections available. So, I mean, it's not as hard a date as like April 15th, but that is the first date. And the thing with the late election is with an S Corp specifically, you have to pay yourself a reasonable salary. So you have to get on payroll, right? And so if you don't have payroll set up, then you can't really make a late election and say, well, I want to be an S Corp and then pay yourself a salary after the fact, right? So you've got to get all that stuff set up as well. So there's a lot of things that go into getting that started. And it can save you lots of money. The S Corp election is a very popular way of saving a lot of tax dollars.
Certainly.
Jeremy, pivoting a little bit back to S Corp, since you just mentioned S Corp, is there an income threshold between where it makes sense to do an S Corp versus or not?
I mean, I have one that I use for my client. Again, getting with somebody that knows your situation and knows what's going on and what you have going on is best. But I always say to start at least looking at an S Corp when you are netting $40,000 or $50,000 a year as a sole prop or just a single member LLC. That's to start looking at it, right? I mean, if you've got a whole bunch of partners in a business and it's only making $40,000, it's probably not a very great time to become an S Corp potentially, because you got to pay reasonable salaries to everybody and you only got $40,000 to split. So it depends, but I'd say $40,000 or $50,000 is a good time to start looking, because with an S Corp comes more, you got an additional tax return, you've got payroll, you've got all these other things. So if you become an S Corp and you're only making $10,000 a year, you're probably paying more in expenses to have that S Corp than you are saving in taxes at that point. So that's a general number that I do.
I think that I would absolutely concur with the assessment there. And again, let's just highlight. So if you're an agency and you are netting net income somewhere around $40,000 or $50,000 a year, you are potentially leaving money on the table and paying more in taxes than you may have to pay. Notice I say may, and again, big disclaimer, I'm not your CPA, right? But again, you have an opportunity to reach out and take advantage of some serious tax planning to keep more dollars in your pocket and help you grow.
And regulatory compliance, what are the most important notes, most important points to note about that?
Ooh, I would have to have more specifics to that question. Regulatory compliance. That we're talking about taxes today. Jeremy, you might just talk real quick about deadlines coming up for partnerships, corporations, tax returns due on March 15th, correct?
Yeah, so they've changed the rules in the last couple of years, but yeah, for the flow-through entities, your partnership, your S Corp, they're all due March 15th. Personal tax returns are due April 15th or April 18th or whatever they do every year now. So it's April 18th this year, along with C Corp. So if you do have a C Corp, those would be due on that. And then you can get a 5-month extension with the C Corp to September 15th. And then the partnerships and the S Corps, they're just information returns, because all of that income flows through to you personally anyway. But you do have to get an extension if you're not going to file by March 15th, and those can be automatically extended to September 15th. And then the personal, you can extend that 10th to October 15th, so you can extend that 6 months as well. But the kicker there is it's an extension of time to file, not an extension of time to pay. So if you do owe money, or you think you're going to owe money, or And this is where the proactiveness of knowing what happened last year, or somewhat of what happened for 2021. So when April 15th comes, if you're projected to owe money and you owe more than $1,000 in tax, the clock starts, penalty and interest start building. So even if you get the extension, so it's just an extension of time to file, not extension of time to pay. And people get confused about that, and then they get hit with a bunch of penalties. So if you expect to owe money, pay it by April 15th if you go on extension. Pay something.
And another question that we had was, how do I know what if my business qualifies for deductions?
Well, every business qualifies for the opportunity to deduct reasonable business expenses. For those that anything that you spend money on that allows you to generate revenue that is applicable to your business should fall under the opportunity for a deduction within your tax return.
I like to use the words ordinary and necessary. If it's ordinary and necessary to your business and to run your business, it's ordinary and necessary to run your business, to spend that money, it's probably a deduction.
Your gym membership to give you some peace of mind and health and happiness, or your country club membership is not deductible. That's not ordinary and necessary to a reasonable person. So when we say ordinary and necessary, it's not things that you've been paying for in the past that.
Uh-oh. Did we lose him?
Let's see. I think we might be frozen there. Well, we can keep going until Jeff rejoins us. Jeremy, there was another question about remote work. A lot of people are doing remote work now. And this participant says, I recently moved my agency to completely remote. How will that affect my tax return?
So I think one of the only, as far as the overall tax return, when you move it into your home, you basically, the only thing that I can think of that would change it necessarily would be if you weren't doing a home office deduction because you had an office at an actual brick and mortar or whatever, you could now add in a home office deduction to that tax return.
Welcome back, Jeff. The question we were just that Jeremy was just answering was someone asked about moving their office and working remotely and what impact that would have on their tax return. So I think, again, if you are watching us live, either on Facebook or here on Crowdcast, please do, if any of the conversation has sparked a question for you and your business, go ahead and drop that in the chat. We have a few more questions that were pre-submitted, but I feel like the conversation today, you gentlemen have touched on them both. The other remaining questions were, what's the difference between paying through digital gateways versus bank accounts? And you touched on that. There was also a question about QuickBooks and I believe the 1099, and I think we talked about 1099s a lot. One question that just came through, Jeff, did you have anything additional to add to those business owners who are now completely working remotely and what impacts that may have on their tax returns?
No, from a tax return perspective, I think that the comments that Jeremy already made there around ordinary and necessary, right? So now your environment's changed, you work remote, but you still have the threshold that you have to overcome about ordinary and necessary. So whatever the ordinary and necessary business deductions are in order to be able to generate income are now deductible. I don't think from a tax perspective, it doesn't really change where I reside at necessarily, if I have an office or if I don't have an office. Income taxes are going to be the exact same for me.
Excellent. Well, gentlemen, you got through those questions that were pre-submitted. Again, anyone who's watching live, get your questions in now.
Yeah, if we have any additional questions, please feel free. This is open Q&A time. We still have a few more minutes left to be able to answer anything that comes up. I think as just some filler of time here while any other questions might roll in, I would just encourage you to become more proactive as an agency owner. Know your numbers. allow your trusted advisors to help you grow your business. Again, taking that shoebox mess of receipts to a CPA is one method of accounting, but it's probably not the best. It's probably not the best method of accounting and being proactive related to taxes. I mean, there are tax savings advantages available to you within the guides of the law if you reach out to an advisor who understands your situation and can help guide you in the right direction. This threshold of $50,000. Well, every dollar you make above 50,000 is an opportunity for you to save dollars in your own pocket to be able to reinvest back into your business and help you grow your business. So that's my, again, philosophically, we talk about this a lot inside of the Business Value Academy. Find a good CPA, find a good insurance person, and find a good lawyer, right? If you should surround yourself with people that you trust so that you can better position your company for growth.
Excellent. And if you enjoy what you're hearing from the gentleman today, you can read more about Jeff's services. His website is jeffmeziere.com. That's Jeff with a J.
Don't.
Oh,
I sure
no,
hope
not that one.
I sure hope. No, it's totally fine. I just hope all of the WordPress developers out there don't take a look at that one. So, yeah, that's a personal business card site that we don't use very often. But feel free to reach out to me. I'm in the Facebook community, so anybody who wants to reach out to me.
You just put up your Business Value Academy one too, I think. So
yeah, businessvalueacademy.com as well.
Yeah,
this is a no judgment zone, Jeff.
There you go. There you go.
Last call for questions for Jeff and Jeremy. There was a question. Oh, sorry. Go ahead.
I was just going to say, Jeremy, any tips that you may have around getting people prepared for tax season that you're seeing right now of, things that you're guiding your clients around, or any tips that you might come up with, 2 or 3?
I mean, I think it's about being organized. I mean, if you bring in that shoebox full of receipts, something's going to get missed. I think it's about having some sort of accounting method in place, because as you grow your business and as your business takes on more and more transactions, more and more money, if you're running it all through your personal account and then going through your personal account for the whole entire year, first off, that's a waste of your time. Second off, you're missing either deductions or you're missing income. I can pretty much guarantee it because it's not being reconciled to anything. So getting that bank account set up and getting some sort of QuickBooks or something in place to be able to reconcile that bank account every month to keep it organized. I think it's just about being organized. I've got lots of clients that are organized, and things always seem to work out better for those clients than the ones that are very unorganized.
And someone did ask, if I use Wave apps or QuickBooks, should I upload my receipts for each transaction?
Yeah, let me take this question if you don't mind. So a couple things here is, one, I think Jeremy's given us really good guidance there. If I don't have all of my transactions and reconciling them on a monthly basis, right? Every month I should have a set of accounting records and books. Again, this transitions you into starting to think and look forward, right? As a virtual CFO, I'm going to tell you is this also gives us data to be able to look at from an analytics perspective to find out what's the health of our business like, right? Not the only measure that you may have right now is cash in your bank account. And that's not the only metric of health for your organization, for your business. Okay. So getting those into something like Wave apps or QuickBooks or bench.co or all the other things that are out there that are available as easy to use technology and software. The question that was posed is, should I upload every receipt? Well, let me start with the end in mind. If the IRS comes knocking on your door and they want to see justification for the expenses that you've deducted in your tax return, you're going to have to produce those receipts, or at least have them readily available. Showing them a line item inside of Wave apps that says, I spent $127 on postage is not going to be sufficient. So you, in your accounting processes and systems, procedures, as Jeremy had suggested just a second ago, you have to ensure that your processes are set up in a way for you to be able to produce those records. You do not want to have to go back and try to go dig through receipts or call up, Staples and ask them for a copy of a receipt from 2019. They're not going to be able to produce it, right? So the burden of proof is on you, the taxpayer, to be able to justify that deduction.
Excellent. We did have another question that came through. I'm going to read this one out. It's a 1099 question. He says, I've sent a 1099 to a subcontractor for $2,100. In February of last year, I paid them $900 by check. In December of last year, I paid $1,200 via credit card. Any thoughts on if this may be a red flag item to deal with? He also says at a recent webinar, I was led to believe that this may have created a major issue, that it could create a major issue down the road.
Hey, Graham, if you can, I don't know what the issue would be for you, right? So I'm going to put blinders on and try to give you some guidance from your end. You've sent a 1099 to a subcontractor for the full $2,100 that you paid them via check and for the additional payment that you made via credit card. Jeremy, correct me if I'm wrong, but Graham has done exactly what's expected of him, which is the total amount that he paid to subcontractor was $2,100, correct?
Absolutely, yes.
That's how I would guide my client, Graham, is you've done exactly what's expected of you. You obviously reached out and got a copy of the W-9 from them because you knew that you were getting ready to pay them a fee of anything. And then it turned out that it rose to the level of in excess of $600. So you are required to give them, issue them a 1099. You've done so for the totality of all those payments. And I think you've done everything in line with what your requirement is. I'm not sure what the red flag would be. If you're suggesting the red flag is on their end, again, their burden of proof is on them as a taxpayer for them to record their income and expenses. But I don't see any issue of red flag. Even if I was on the receiving end of this, I would get a 1099 from Graham as a vendor or customer, right? And I've properly recorded all $2,100 that I've received in cash. Therefore, I don't see any red flags.
Man, I don't know what the major issue down the road would be. It doesn't. I can't think of any, for sure.
Sounds good.
I'm sure those are lovely words for Graham's ears. Rest easy, Graham. Rest easy. All right. Well, I believe that was the final question that's rolled in. I just want to take a moment to thank both of you gentlemen, Jeremy and Jeff, for spending your time answering these questions. Again, anyone who's watching, you can visit businessvalueacademy.com and see more about Jeff's services and information. And I just want to give you a big round of applause. Thank you so much. And hope we can do this again. And
certainly, I appreciate Jeremy being on to take all the technical questions. But once again, I just want to promote Core Group and the things that he does over there, because they are one of the few, and I do say one of the few accounting firms that actually help people grow revenue as opposed to just doing historical reporting. So let me give some kudos to that. And if you don't have an advisor, it's definitely a place for you as a resource to reach out.
Absolutely.
Sure. Thanks for having me.
Thank you. Good luck to everyone watching. Good luck this tax year, and take this great advice to heart.
Awesome. Thanks, everyone.
Thank you.
Thanks, guys.